generation warcraft ships. The company also recently undertook a capex program to construct a new dry dock and international ship repair facility that will help augment its capacity and increase its execution speed. It is one of the only shipyards which undertakes construction of civilian ships and has orders from Norway and Germany. The company is also one of the major suppliers of vessels for inland water highways. It is also undertaking a pilot project to construct a vessel which will run on hydrogen in partnership with KPIT Technologies.
I have with me Mr. Madhu Nair, Chairman and Managing Director of Cochin Shipyard. Mr. Nair, thank you very much for joining us on NDTV Profit. My first question to you, in 2009, you were just a civilian shipyard. How did you bag the first indigenous aircraft carrier order?
See, in 2009, when the Indian Navy and the country was looking at investing in the next large vessel, the aircraft carrier in India at that point of time, they had done a lot of due diligence. The system had done a lot of due diligence, and as far as Cochin Shipyard was concerned, we had facilities, so capacities, let's put it that way. We were already doing large vessel construction, and we were also doing pretty complex vessels. So from a capability point of view and capacity point of view, when the Navy was scouting for a shipyard, ours was the only shipyard which would fit the bill from both these angles. And I think there was a general confidence. The general confidence was good because the general confidence also came from the fact that CSL had a lot of experience on the aircraft carrier side, on our ship refit side. We were the only shipyard which had done ship refits. So ship refits, naval vessel refits, all were there. But yes, there was always this nagging doubt. This is a yard which has not done a naval vessel. But I thought I should actually say that.
But because you were the only civilian shipyard and others were the different shipyards.
Correct. So straight away capacity was one thing. But I think you should give the credit to the system and the people holding it at that point of time, both in the shipyard and within the defense establishment, who had confidence that yes, together we can do this in Cochin Shipyard.
So it was also a capacity building for you in some sense, because it was new to you. Aircraft carrier by themselves is very complex in nature. So and you took some time in this, because from 2009 to nearly 22, and you had a COVID also coming in between. So that also
capacity building. Yes, I should say that there's been, for the country, for the system, it's been steep learning. There is no doubt about that. But there were facets and there were components which was all around. But the most important part is when you're talking the size and scale of an aircraft carrier, which not many countries have actually done, the size and scale is what makes the difference. Many a times the capabilities and capacities you may be able to integrate, but not on, for example, say when you do a high-end destroyer, there are still good level of complexities. But a carrier probably would be multiplied by 7 to 10 times kind of integration complexities. And when you have a lot of things working around, one error, one mistake, one planning interface not being looked at could cascade into others. So this was the greatest problem. And not just for the shipyard, for the Navy, the shipyard, the major vendors involved, for everyone we were learning together. That doesn't mean that you are all doing those specializations for the first time. Many had actually done those specializations. But working, for example, it's like putting in the best people together and make them work as a team. So that kind of a thing. So the learning has been steep. There is no doubt about it.
It was 76% indigenous content in the aircraft carrier, and remaining was, I think, some of the electronics and others were only from what imported.
Yeah, right? Approximately 76% Indian content, and certain both on the mechanical side there are certain other solutions which are imported. Certain are imported through high-end Indian companies, so that the transition is also there, but 76% Indian content.
There's always this talk over the second IAC being built. INS Vishal, I think, that's a name which is floating around. and it seems that you are the only contender here because of the expertise that you have done in the last few years to back that as and when it comes.
I see there has been a heightened discussion on this, and I can say, like, so the Indian Navy, the Ministry of Defense, due to the larger considerations, have always been talking about further aircraft carriers for the country. Now, whether we are the only contender kind of a thing, as I would, from the shipyard point of view, I would definitely say, like, the kind of aircraft carrier experience, last 30 years, it's not just Vikrant. As I said, both INS Virat and Vikramaditya, the refits. See, refits on a carrier is also not small. So, for example, somebody who would have docked a carrier in India, it's only Cochin Shipyard. Who have got 50 people like me, we all crawled in aircraft carriers during the refit, the point of time. So, the kind of interface, capital ship interface, and again, between the Navy, between Cochin Shipyard, our engineers, the kind of strengths we have built up, engineering strengths, detailed system strengths, I would think it's practically Cochin Shipyard at the end of the day. So, and I'm sure that this is being discussed. I would be extremely happy that this is decided at the earliest, because Vikrant coming out and the entire system, the entire fraternity, Navy, seeing this 1 and odd years now in operation and the kind of good feel it has given, I think the confidence level is very strong. There are various other factors also. So the larger thought process, there's a lot of skill sets and knowledge that's been developed within the organization, in Cochin Shipyard, within a framework within the Indian Navy, within our sub-vendors, like say Bharat Electronics, Lawson & Toubro, BHL. Now all this, it should be captured back in a short time, and then it would be best we do it fastest. And I think this is also understood very well within the defense establishment. And from what we see in the...
How long will it take for you if you get the order maybe today? Means in the past it was a learning phase, so it took you some time. When you talk about an order that may come in today for another IAC aircraft carrier, how long will you take to complete it?
See, there's something like this all depends on what kind of aircraft carrier we're talking. The large take, which we understand, is the general view is that this country must go for more of a repeat from a platform point of view and appropriate technological and evolutionary changes. So from that point, I have gone on record many times and said it's somewhere around 8-ish to 10 years kind of a thing. But this all depends on, because you can't talk something unless you know what you're going to build, you know. But gut feel is what I'm saying. So that gut feel is floating around. But to talk more specifics, you would need to understand how exactly things would be ironed out.
So you completed 50 years last year.
Correct.
In that 50 years, you have transformed yourself from not only being a commercial shipbuilder to a defense shipbuilder as well. And from within that, ship repair and shipbuilding. Yeah. Each of them have it. So there are 4 verticals for you in there.
Correct.
How do you see this entire verticals moving going forward in terms of growth?
You're right. We actually, not many people are very clearly aware of this. We are in ship repair and we are in ship building. And within both, we are in commercial and the defense space. It would fluctuate. The revenues would fluctuate across these 4 verticals. But we see strength in all 4 verticals. And defense, it's been Indian. We have now, till now, we have not looked at anything outside, because that's really not been, there's been enough drive from India. As we are speaking today with 8 ASW corvettes and 6 NGMBs, we have 14 high-end vessels to go on the new building side. Refit, the defense part, various things are going very strong, including a recent new
INS
Bias, exactly, the re-engineering works, because it's a different model. So defense is going strong. Ship repairs on the commercial side, the shipbuilding side, the European, the emerging new tech, green tech part, we are seeing strong traction over there. So that traction is looking good. And we hope again, I am very positive about not just Cochin Shipyard. I am seeing this positivity in India. Suddenly there is this, various stars are aligning, or let me say the geopolitical stars are also aligning.
That's evident in your stock price as well, right?
It has to, because India, I always say, we probably missed the last manufacturing bus, but there's a new bus. There's a newfound positivity in India, the young India, the government. I think everything is going good. And if this momentum can be sustained, and that momentum is very important, because we all work under passion. There's a momentum. If the world also connects, and the world is connecting at this point of time, then that green ship, I put it under that large umbrella, the green ship tracking, advanced technologies, is transition.
We're doing a couple of them for the German, for European, Norwegian,
ones. We are doing the first fuel cell container vessel for a European company. We are picked in wind service vessels for a German company. So this looks good, and we are talking with various others. So that part is looking strong. On the ship repair side, again, we are seeing strength. Again, for us, it's peaking at the right time, because two of our large expansion projects, on which one, the ISRF in Kochi, is a purely dedicated ship repair system. That gets completed by end of this year. Full-blown operations will be another 4-5 months down the line. So that's coming up. And the government of India is very keen, Honorable Prime Minister's vision of having maritime clusters in the country. We are happy that we have been able to front it, both from Cochin, from Mumbai, and certain other places which I can't talk today, but on the West Coast, where we are trying to develop something. So this ship repair cluster would also drive, because again, as a company, we feel very strongly about ship repair and the kind of growth it can bring into the segment in India.
That's also a growth segment for you, right? In the sense it is the highest margin business for you in that sense. So you have Mumbai, you have Udupi, and you have Cochin.
Correct.
And within Cochin you have the international ship repair facility which is coming up, and the new dry dock which is also coming up, which is dual purpose. Shipbuilding as well as ship repair. How big is the ship repairing opportunity for you? You've been talking to analysts, and you've been telling that over the short term, 2 to 3 or 4 years, you look at 1,200 odd crores coming from there. But is it going to be as easy? Because are we seeing?
See, when I say that 1,200 crore our ISRF will come into play, Mumbai and Calcutta, we have struggled a little bit, but stabilizing. So 1,200 looks attainable within that, as I have been talking, another 2.5, 3 years kind of a framework. The next step would be 1,500, but the full-blown step could be much more. You can multiply it by 1.5, 2.
We are coming to an end of this segment, but in the second segment, we are going to talk about the order book, the ongoing projects, and the opportunities which is there for Cochin Shipyard. Welcome back. We are in conversation with Madhu Nair, Chairman and Managing Director of Cochin Shipyard. Mr. Nair, you are sitting on an order book of 22,000 odd crores. What is the kind of outlook that you have on this order book? How many years will it take for you to complete that, and what kind of order pipeline that you're looking at?
See, the 22,000 crore order book, about 15,000 crores of that are 2 naval projects. These are the ASW corvettes, 8 numbers, and 6 next generation missile vessels. This roughly give it I'm just putting it across 6 to 7 years for this part to get completed. The balance is our commercial orders, as I was mentioning, the European short sea vessels and the green vessels. Those are all, and a large dredger for DCI. These are all, give it around next 4 years, 3 to 4 years, deliveries to come in actually mid of next year onwards, getting all the way into the next 36 to 48 months. So this is a flavor, because the defense vessels would be bit more longer. The series is also longer. And the
AW ones is these are
the first three getting launched, getting the dock getting flooded for tomorrow's launch, and it's a very momentous occasion for the Indian Navy and for Cochin Shipyard. 3 vessels at one go.
Yeah. And by when will these vessels be completed?
The first vessel is end of 24 delivery, and thereafter 6 months is the interval between vessels. But the initial vessels, we may be able to, all going well, we may be able to do it much faster than this.
And as you increase the number of ships, as you launch and complete them, the shipments and refitments also come to you, right? In that sense.
The refits
are
not necessarily. We would have an added advantage on that. The Navy is thinking of such a scenario where they go to as a what they call one lot kind of a thing, but that's not yet on. So right now the refits could go to any place, but we are one of the largest refit yard, what the Navy calls offloaded refits. In otherwise they do it in their own naval dockyards. So the offloaded refits we have been doing very strong. Must be about 300 projects till now.
What is the kind of pipeline that you're sitting on?
The defense is strong. It's a tender situation, so what comes we'll have to see, but otherwise defense more
how big is the value there in terms?
20, 30, 40,000 you can say. The
aircraft carrier would be what, 40?
I don't want to talk those figures, but I wouldn't refute what you're saying, kind of a thing. But then there are other projects. The projects, because the Navy is on a growth path. The non-defense part, we are seeing easily 4,000, 5,000, 6,000. So it's not that we want everything, and no yard would like to fill the dock, say 6 or 7 years down the line with a commercial vessel. You want to make sure you are agile enough that you always have. I would be happy if we have 4.5 years kind of a order book on the
every year.
Correct. Because then you're catching the market and you're moving sure. On the naval, we would look longer term.
What, 6 to 10 years, that kind of stuff?
6 to 7, 8 years kind of a thing. Because see, as we are all aware, there are 2 parts to this. One is the commodity parts and other thing. The other one is the equipment part.
How do you manage that commodity risk?
See, commodity on a defense vessel is much more easily handleable for a vessel of this type, because that steel or other things, even if it varies, that part is lower.
Okay.
It's the equipment part which needs to be handled carefully. And with foreign exchange variation, if you have imports, luckily and thankfully, we are into strong indigenization mode. But even within that indigenization mode, maybe there is a foreign component, because I don't think we can aspire for a 100% shortly. But so this is something which we'll have to handle. So what we typically do is we try to again enter into long-term contracts where things are fixed, and defense contracts, the latest DAP contracts, provides for the forex variations also. So there is a method. For the commercial part, what we do is large ships, yes, steel price fluctuation, $100, $200. I can take a $50 fluctuation. I can take that side, this side. That's where experience comes. But if the market goes up by $400 a ton or something, then I think we have a problem.
Do you do a long-term supply agreement in place?
No. We do case by case, but these days it's 100%. It's not we club projects if it's possible. It's 100% Indian steel. So we go for JSP, JSW, ArcelorMittal, and that's looking good. Even though
all of them have been able to build a different grade.
Excellent, everything. Excellent quality steel.
The Indian defense shipyard industry, between you, Mazagon, Garden Reach, do you see enough orders coming in the next 10 years? Or the visibility part of it?
On the defense side?
On the defense side?
I feel it could be generally good. Generally good. See, the whole thing is everybody, see, there are projects which are smaller vessels added up to certain larger numbers. There are these larger projects, you know.
Yeah.
So, see, the larger projects comes in lumps. It's not that the Indian Navy can go and order. So, naturally, people are talking about the submarines.
Because it has to go through the budget as well, right?
It has to go through the budget. It's to go through capacities, capabilities. So, but generally, if your general picture would be next 10 years, India, our growth path, what we are seeing, our stature in the world, I think things should be good. Things should be good.
What is the kind of order book orders that can come in and flow in, just to get an idea of how big could be this industry?
We are talking potential aircraft carrier. You have always been seeing about the P-75I submarines, where we are not involved, but that could be what, 60, 70,000
That's interesting
crores.
because that's the only place you are not there. I mean, all other warships. Is it a conscious call not to go into that?
See, we definitely did take a look at it, but we also realized that that was not the aspiration for the country. And rightfully, see, as a business, I would naturally try to take a knock at practically everything. But you look at any country in the world, submarines don't get built by multiple companies because there's huge expertise. And today, that kind of expertise, there are 2 large organizations in India and a third, which I don't want to talk, but there are 3 large pockets of knowledge. I think we would be keen on a refit possible because we feel we are very strong in the refit side.
And your dogs can manage refits for submarines.
We can. But then that's not been our core focus because the country has actually positioned it in a particular fashion, and we respect that. We see it is not that everybody can get into everything, you know. So there must be, and again. When I'm talking about Cochin Shipyard, first and foremost, we are an Indian company, you know? So we do respect and understand, and if we can position appropriately, as we say, for example, you asked me that question. I feel we are an out and out aircraft carrier company. That I would definitely like to see that experience excellence, and it's not just in Cochin Shipyard. It is that larger ecosystem around Cochin Shipyard. Similarly, if somebody is doing good on submarines, why not? That kind of a thing. That's why we had a hard look at it, but then it wouldn't fit the requirements.
And the capital required would be much more in that sense?
See, we are building a new dry dock. That dry dock can take a submarine also. So it was not coming from the capital point of view. It was coming from the strategic intent point of view.
What about the capex finally? You've been doing capex for the last couple of years. Your international ship repair and then new dry dock all are going to come in by 24-25. Will you require more capex going forward?
See, what we have done is like the 2 projects which you said, the new dry dock and the ISRF. These together are about 2,800 crores. In addition, we invested in a new shipyard in Kolkata, about 200-ish. We bought a shipyard in Udupi, 100 and odd kind of investment. And then within the company, within software solutions, within various strategic things. So roughly we have invested about 3,500 crores. And we were doing this when our net worth was around 2,400, 2,500
more
crores.
Than double.
Now we are about 4,500 crores. So I thought we have shown the intent. Everybody likes sitting on cash. I have brought in a view here that cash definitely is of interest, but cash, if it is invested back in the business and you have the will and the intent, so we have come this for capex heavy investments we have done. Going forward, your question whether we'll do capex heavy, ship repair, the right possibilities we would like to. Technology and investments, we would definitely like to have some money with us to look at the right opportunities. in something global also, we will be keen to look at.
And
as we are speaking, we are practically a debt-free company.
Right, well, a couple of 100 crores.
Small, that bond that will get redeemed this year.
So what about the return? Your return on equity fell below 10%. You see that now that the capex cycle is over for you and you are concentrating on high margin business, that should go up again?
See, return on equity is a little bit, ROCE, if you are talking about ROCE, like the kind of capital we are deploying, because these are capital heavy industries. So, for example, a dry dock when we are investing, it is not that people bring in the parameters of asset turnover and other things. That may not work directly if you are looking at that standalone. We have a part of the shipyard which is beaten down because we have continuously kept investing, but that part is beaten down. So on an overall point of view, things should improve a little bit more, but I wouldn't really be too bothered about the ROC, the ROE part, while the markets may be extremely dicey about it. Business point of view, we look at the top line and the bottom line. The top line growth, I have always been saying I would be happy if I can do a steady state 12% year on year. I would be happy if I can beat it a little bit good, but otherwise 12% year on year. And a margin level as what we had discussed earlier, if we can hold on to those margin levels, then I think we have reason to invest and create these businesses, because at the end of the day, this is not an industry, and we are actually creating an industry which is not for easy entry people. So we are not looking at the next 5 years alone, and this is the toughest call people like us have. You want immediate things, and you want all the flamboyant things to be done. Sometimes we want to be below the radar, not talk too much. Then just use the word doing it silently. Yes, that is what we would actually like to do. So we normally don't do too many interviews.
Thank you very much for joining us today on NDTV Profit.
Thanks a lot.
It was a pleasure talking to you.
Thank you. Thank you.
Hi, thanks so much for joining in. You're watching NDTV Profit. This is Market IQ. My name is Alex Matthew, and with me is Pallavi Nahata. Hey, Pallavi.
Hi.
Well, as we speak to you right now, we have come off the day's highs, but earlier in the session today, we saw an all-time high for the Nifty 50. In fact, we are trading with gains of about 0.4% for the Nifty 50 right now, but we hit a day's high of 21,600, held above that mark for a very short period of time. In fact, you're seeing more of a cool-off in the broader end of the market. Let's pull up the mid-cap 150 chart, and you'll see the intraday chart has moved significantly off the day's high. It is now trading with gains of about 0.2%, or rather 0.1% or thereabouts, and the small cap index still trading in the red, down considerably from the day's high. It is trading with cuts of about 0.1% or thereabouts. Let's talk about a few sectors that you should watch out for, and in fact it is the metal index that is the outperformer today. It is gaining about 0.8% or thereabouts. But you have the PSU banking pack that is doing quite well as well. You have the PSU banks as a whole that are gaining about 1.2%. In fact, that is the entire sectoral picture for you. You have auto that is up about 0.7%, realty about 0.5% higher, and the Nifty Bank that is up about 0.5%. The underperformers are three. You have the media pack, you have energy and oil and gas that are down in the dumps today. Of course, oil has been a bit of a focus with crude oil prices rising. Brent crude is trading above $80 to the barrel because of renewed concerns about the Red Sea region and maritime trade through the Suez Canal, which is resulting in some concerns about the supply of oil. Right now you have NYMEX that is trading at about 75.4, but as I mentioned, you had Brent crude, which is trading very close to that $81 per barrel mark. In terms of a few stocks from the benchmark index, then you have Hindalco as well as Ultratech Cement, which are the top performers on the Nifty 50. And then you have a couple of auto names that are doing well. Bajaj Auto, Tata Motors, Bharti Airtel, all gaining close to 2% or over 2% at this juncture. Among the losers, you have NTPC and Britannia, which are losing over 1% each. And you have Tech Mahindra and Adani Enterprises, which are also losing ground. Now, very quickly pull up the advanced decline ratio, because that will give you a sense of how the market texture has shifted, and it's very close. It's even Stevens at this juncture, but it started off with a wide gulf between the advances and the declines, and now you have more or less equal number of advances and declines. Now, it was a day of a record high for the Nifty 50, so it got us thinking. It's quite possible for the mutual fund industry to have seen its assets under management cross a landmark. And in all probability, you will get a confirmation on this on the 8th or 9th of the new year, that is January. But in all probability, you have assets under management in the mutual fund industry that has crossed 50 lakh crore rupees. It stood at around 49 lakh crore as of the end of November, and that's up about 23% from the start of this year. I'm talking about the calendar year. A bulk of that has been contributed by an uptrend in equities, both in terms of contributions by retail investors and also because of the upside that you've seen in equities as a whole. So the underlying has lifted the assets under management as well. Equity assets under management are up as much as 29% or 28.5% or thereabouts. Just in December, you have the benchmarks that have gained quite considerably. The Nifty 50 is up about 7%, the mid-cap index is up over 5%, and small cap is up about 5%, which is probably the reason why you're seeing the CEOs of a couple of very large mutual funds that are confirming that in all probability, Pallavi, we have crossed that 50 lakh crore mark for the mutual fund industry, and quite a landmark it is.
Absolutely. Now, moving on, an update from the SBI, the country's largest lender, today raised its deposit rates across tenures. The said rate hikes will be effective from today itself. We have our colleague Mimansa Verma joining us with more information.
Hi, Pallavi. So the State Bank of India has raised its deposit rates by up to 50 basis points today for deposits under 1 year tenure and those that are above 3-year tenure. So for general public, the revised rates range from 3.50 to 6.50%, and for senior citizens, these new rates will be in the range of 4 to 7.50%. So now why SBI has done this is to attract depositors as banks across as the board are struggling with tightness in the liquidity in the banking system. So as on December 26th, the liquidity in the banking system has been squeezed to rupees 2.6 lakh crore, which is the level last seen in 2016. So due to this, many banks and companies are now tapping short-term funds to short-term debt market to raise funds. Now the impact of tightening liquidity is also evident from the short-term money market rates. If you see the call money, the interbank call money rate, it stands at 6.75% today. So the tightness in the liquidity in the financial system is quite overpowering now, and the banks are resorting to measures like raising term deposit rates to attract depositors.
Well, tightening liquidity, as Mimamsa pointed out, that's going to be something we'll continue monitoring over the next few days. Moving on.